Let me ask you a simple question. Is your 2026 mortgage payment already too high? December is the one time of year most people finally slow down, look at their bills, and think something has to give. If that's you, this video is for you. I'm ReAnn Gonzalez, your local mortgage broker licensed in Texas, New Mexico, and Florida. I've been helping families with their home loans for over 30 years, and today I want to talk about something very simple. Okay, so now let's get into it. Should you refinance, pull some equity with a HELOC or cash out, or should you leave everything alone and do nothing? No hype, no scare tactics, just a straight grown-up conversation. When people ask me, should I refinance, I don't start with a rate. I start with 3 questions. Number 1, what is your current rate versus the market? If your current rate is much higher than what's available today, that's your first green flag. If the difference is tiny, that's usually a yellow or red light. How long are you going to stay in this home? If you're planning to move in 1 to 2 years, a refi rarely makes sense. If this is your keep for at least 5 to 7 years house, then a refinance starts to look more reasonable. How long will it take you to recoup the closing costs? Let's say a refi saves you $300 a month and your closing costs are $4,500. $4,500 divided by 300 equals 15 months to break even. If you'll be in the home 5 more years, that's 15 months to break even and over 3 years of real savings after that. If the recoup time is 5+ years and you're not even sure you'll be there that long, probably not worth it. When should you probably not refi? Here are a few times I tell people, leave it alone. Number 1, the new rate only saves you a small amount monthly. Number 2, you're likely moving, downsizing, or selling in the next couple of years. And number 3, you're rolling a lot of short-term debt like credit cards into a long-term 30-year loan, but haven't fixed the spending habits that created the debt. Extending debt for 30 years can look cheaper, but if nothing changes, you'll swipe those cards right back up again. I'd rather tell you don't do it than watch you dig a deeper hole. Now, let's talk about equity. A lot of you have built equity over the last few years, and you're wondering if you should tap into it. When a cash out refi or HELOC might make sense is when you're buried in high interest credit card debt and you're serious about cutting it and not running it back up. Or you want to remodel a new kitchen, put a new roof, add a room so you can stay put instead of moving. And number 3, you're planning a life change in 2026. Maybe a move, divorce buyout, or helping kids with college. And you want to clean things up now while you have time to plan. In those cases, using equity can be a strategic move if we run the numbers and you have the discipline to stick to the plan. When is it better to leave your equity alone? You're close to retirement and don't want to restart a big 30-year clock. Or your budget is already tight and you're using credit cards to survive each month. And lastly, you know deep down that if we pay off your cards today, they'll be back up again by Christmas. In those cases, that equity is your safety net. I'd rather help you build a budget and protect it than strip it out and add more pressure. If you're a realtor, This is the perfect time of year to help your clients get ready for 2026. A smart refi or equity pull now can pay off ugly debt so they can qualify cleaner when they're ready to move next year. Fund repairs or updates that will help the home show better and sell for more. Give them a clear plan. Here's what we need to do in 2025 so you're ready to buy in 2026. One simple question you can ask all your past clients. Have you had your mortgage reviewed in the last 12 months? Most of them will say no. That's your opening to add value instead of just asking, are you thinking about buying or selling? Send them my way for a quick review. I'll tell them the truth, even if the truth is you're in good shape, stay put. So, as you're wrapping your presents, paying your end bills, and thinking about what you want 2026 to look like, don't ignore your largest monthly payment. If you're wondering whether a refinance, a HELOC, or doing nothing is the smartest move, here's what I want you to do. Message me your address, current rate, and your loan balance, and I'll tell you straight if a refi or HELOC makes sense, or if you should do nothing for now. No pressure, no sales pitch, just clear, honest numbers so you can go into 2026 with a payment and a plan that actually fit your life.